Hello, a very good afternoon, good morning. Welcome to HYCM's live workshop with myself, Giles Coghlan. We have an exciting day today. We will be looking at the US PMI print and the potential reactions that I'm expecting from that. It's definitely a good one to be getting. Don't forget, as folks are signing in, the whole idea of this webinar workshop is that it's from an educational perspective. If you look over my shoulder, someone with a professional FX analyst trading background, and you see how I go about understanding the markets, and the whole idea is that's an educational perspective for you. It's not a signal trading service as such. Those of you who are regulars understand how that works. And we are looking at the US PMI print today. And remember, the very key principle we're always trying to look whenever we're trading an instrument is we're looking to back strength against weakness. So we're looking to trade a strong currency against a weak currency to give us the best directional bias, in the same way that we would anticipate this strong arm overpowering this weak arm, we can see a bias for a currency, and that is exactly what we're going to be doing today.
Just of note, in Russia, Russian post had
turn my squawk off. Now, there is one currency that is standing out as being very strong today, and that, of course, is the New Zealand dollar. If you just take a look, if we just take a look at the New Zealand dollar, you'll see it's been the strongest currency on the session. And that's been after the last RBNZ rate meeting. And I'll just briefly run through what the RBNZ said. Now, see, New Zealand dollar, strongest currency of the session, just underneath the pound, and led early in the morning. Now, what's going on here with the New Zealand dollar is the RBNZ, they have hiked by 75 basis points. Now, if you remember, on the preview, 15 out of 23 economists were expecting a 75 basis point hike, and only 8 were expecting a 50 basis point hike. We also looked at short-term interest rate markets, and it was nearly sort of a 60-40 split in terms of a 50 or 75 basis point hike in terms of expectation. So in other words, it was a bit of a surprise whatever happened. Now, the 75 basis point hike wasn't a surprise. The surprise, although it was a slight surprise, it's not what resulted in the New Zealand dollar strength. The surprise has come from the fact that the RBNZ have indicated that they're going to be hiking sooner than previously indicated and higher. So they have revised their peak interest rate level all the way up to 5.5% for the third quarter of 2023 from 4.1% at their last meeting. So they also mooted the idea of a 100 basis point hike. So all that supported the New Zealand dollar. Okay, so bear that in mind. New Zealand dollar strength. So with that in mind, when we come to the US PMI print later in the session, if we have reasons for US dollar weakness, we'd want to pair it against the New Zealand dollar. Remember this strength against weakness idea. So that's the kind of perspective and the context of what we're looking at. So we've been seeing a cyclical reaction for the US dollar in terms of US economic data. So in other words, good news has been supportive for the dollar because it means the Federal Reserve can keep hiking interest rates because the US economy can take it. We've been seeing bad economic data be bad news for the US dollar because it means expectations that the Fed will hike more slowly because the US economy is showing signs of slowing down, and therefore the yields fall and the dollar falls. So good news at the moment is good for the dollar, bad news is bad for the dollar. Now let's just take a look at our expectations. And what you can see, here we have the October services PMI, just underneath 48, that's in contractionary territory, and notice the trend. Services are dropping in terms of the PMI outlook. Look at manufacturing, you can see that the manufacturing print was just above 50 for October in expansionary territory, but still the trend is lower. And if you take a look at the composite reading, again, you see that the market is trending lower and below that 50 handle, indicating contraction. So the basic trend is lower. In order to see further US dollar weakness, what we would need to see is a big miss in these PMI prints. So what we'll be looking for is the global manufacturing PMI data coming in below 49. We want to see the services PMI coming in below 47, and then the composite in contractionary territory somewhere below 49.5. So the best opportunity will come from a miss across the board. We want to see a miss in all of them, below minimum market expectations, below 49 for the manufacturing, below 47 for the services, and below 14, somewhere below 49 for the global composite. In that instance, I would expect dollar weakness, and I'd look to pair it against the New Zealand US dollar pair. So if we just take a look here, so we look at New Zealand US dollar upside. I'm just going to see if there's any obvious ways of getting involved in this. I'm just having a quick look at the technicals. I think we would want to use some pivot points here, would make sense. Yeah, so the best way I'd be looking at this is if we got a big miss in the data, I'd be looking at taking profit, first of all, that R2 pivot point, and if that breaks, looking at the R3 pivot point. So if we just put that on the screen, then I'll be looking at taking profit just underneath that 6250 region. So there will be my two targets, 6200. And then what you typically expect, this is if we get a big miss in the data, you then expect the R2 pivot point to react as support. So it'll be breaking, and then as it broke, you'd expect to find buyers at that 6200 level on a big miss. So I'd be looking at that. Also, if we saw a big miss in the data, I would expect gold upside. Take a look at gold. You'll see that gold is forming a very interesting potential false break of a Harami inside bar. So on the daily chart, we see Harami inside bar, anticipate a potential false break to the downside if we see a big miss in the PMI print, and then that can look like it can run high up to that 1760 region, maybe even up to 1780. So that's quite exciting for gold. That would be Harami inside bar break, but for the catalyst for that, we would need to see that PMI prints surprising to the downside. Again, if it surprised the downside, we'd also expect upside in the S&P 500. And just taking a look at the S&P 500, we can see that we're sort of hovering around this sort of, this would be anywhere back down to that 4,000 handle would be decent support for the S&P 500 if we got a good miss. I'd expect that from an intraday basis. Now, there is an opportunity as well if we do see a big beat across the data. There's been news that the EU is considering a price cap of $65 to $70 a barrel for US oil. That has been pressuring oil prices lower during the session. There's a number of negative catalysts coming out for oil regarding Russian oil price caps, and that's just been pressurizing oil prices lower. And if you just take a look at the Brent crude and the US oil space, you see that's pressuring lower. That weakness in oil has been a big drag on the Canadian dollar. You can see the Canadian dollar, one of the weakest currency on the session due to oil weakness. So if we saw a big beat in the data, the dollar would strengthen and we'd expect the CAD to remain pressured. So that would potentially open up a US dollar CAD upside bias. So this would be in the scenario where we saw a big beat across the board, 50.5 plus, 51 plus, and global composite above 50 into expansionary territory, then we would expect that to support the US dollar CAD pair higher. Okay, so very, very straightforward outlook. Big miss in the data, New Zealand US dollar upside, gold upside. Big beat in the data, US dollar CAD upside would make sense. So it's straightforward. I don't want to get involved in anything else at the moment because we've got the US Thanksgiving holiday tomorrow. And in holiday thin markets, you can get one of two reactions. You can either get extraordinary large moves, or you can get very quiet markets. And if we take a quick look around markets at the moment, we can see that, you know, equity futures markets very contained, as you'd expect. The volatility we're seeing in currency markets with the New Zealand dollar and the pound on those PMI prints, you can see that commodity markets, you know, pretty flat. Bond markets very flat. It's holiday thin trade. The dollar very flat. So we are not seeing a lot of movement. And in these holiday thin markets, you just got to be picky. And we're picking this PMI print as a potential opportunity. Also worth looking at the Bank of England speakers coming up. We've got Bank of England's Pill, Ramsden and Mann over the next sort of 24, 48 hours. And the pound New Zealand dollar pair could be a very interesting pair. If we had a significant bearish outlook from the UK Bank of England speakers, then we'd expect the pound New Zealand dollar pair to fall lower, and you could potentially look a break of this trend line to the downside will be very attractive technically. And you can just see here that prices are wanting to kind of flush lower, and that would be in line with the New Zealand dollar strength after the RBNZ's hawkish rate meeting last night. But if we saw significant reasons for pound weakness, then pound New Zealand dollar selling makes sense. Don't want to sell it now because we had those positive PMI prints out of the UK earlier. That's allowed the pound to gain during the session. You can see the pound gained back against the New Zealand dollar after those PMI prints. And you can see that the pound is one of the strongest currencies on the session alongside the New Zealand dollar. In fact, stronger than the New Zealand dollar. Not surprising to see some pound strength because it's been so negative, the outlook for the pound recently. So anything good just allows a bit of profit taking, a bit of a retracement in the pound. However, if we got Pill, Ramsden, Mann all giving a more dovish outlook, pushing back against high interest rates out of the UK, some kind of indication of slowing down, then pound New Zealand dollar makes sense technically, and look at this potential trend line as a key area. Aside from that, folks, there isn't really much to say. We're going into the core PCE print next week. That's going to be huge. The overall market sentiment, the market's trying to work out what's the Fed going to do. Are they going to be more aggressive and keep hiking interest rates? Are they going to pause? Are they going to pivot? And each time we get a data point that's significant, the market's sort of pushing on a new narrative. Now, sometimes the market puts a narrative on that the Fed's not going to use. But from our perspective and short-term trading, that's absolutely fine. And we look at those short-term trading perspectives. And the next short-term trading perspective is going to come from this PMI print. Big miss, then markets are saying, slowing economic activity, less aggressive Fed, dollar weakness, S&P 500 upside. Big beat, the Fed can be more aggressive. The US economy is more robust than the market was thinking. They can take high Fed rates, therefore weakness in the S&P 500, strength in the dollar, upside in dollar CAD. Folks, it's been a whistle-stop tour. It's been lightning. And any view on dollar Swiss franc? Now, let's have a little look at dollar Swiss franc. Hi, Nikita. So it's not the best pair that I would be looking to trade today. The best pair I'll be looking to trade is the New Zealand US dollar on a miss. But if we saw a big miss in the US PMI print later, hi Nikita, I'd expect dollar Swiss franc downside, and I'd look at this key area here, 0.9425, 0.50 as support. So this would be big miss in the US data. I'd expect US dollar Swiss franc downside. The Swiss franc at the moment is really quite heavily sold. So seeing some strength in the Swiss franc does make sense. So if we got a big miss in the data today, Nikita, I would expect the US dollar Swiss franc pair to fall into that support level. That's what I typically expect. And, I'd have my stops running above that 0.9600 handle. So if it was wrong, then, I wouldn't want to be holding into the trade there. But a big miss in the way that I've outlined, I'd expect dollar Swiss franc to move lower. We have seen an increase in shorts in the commitment for traders report in the Swiss franc. Stretched positioning in the COT report is noteworthy for the Swiss franc. So therefore, a little bit of Swiss franc strength does make sense from a mean reversion perspective. So as it happens, it wouldn't be a terrible pair to trade in case of a PMI miss. So if this is a big miss, sub 49, sub 47, sub 49 for the composite, that I expect dollar Swiss franc downside into that near-term support level that's marked here. Apart from that, Nikita, I wouldn't have a medium-term view on anything at the moment because everything's so uncertain, and every time we get an inflation print or a big economic data point, the market's using that to make fresh assumptions about what the Fed will do. So these markets are best traded through the lens of, I'm going to take one data point at a time, take a short-term trade, and then move on to the next opportunity. It's not worth it, in my opinion, trying to guess what's the Fed going to do in 3 months' time, 6 months' time. It's so uncertain. How sticky is inflation going to be? Difficult to know. How tight will the Fed have to go? Difficult to know. Have the Fed tightened too much too quickly? You understand what I'm saying? Difficult to know. So these short-term opportunities, but yes, dollar Swiss franc would be a short-term opportunity today, in my view, given the fact that if we saw a big miss in the data, dollar Swiss franc downside into that support level here, and I would look at taking profit at 0.9431 would be my take profit region. Great. Okay, folks, I'll just check if there's any more questions. Okay, next week's gonna be really interesting. We've got that core PCE print. I will get us ready for that, and that's potentially a really good opportunity for gold heading into year end and ahead of the Federal Reserve meeting on December the 14th. So there is some interesting things popping up. So do come back for Monday, 12:30, and I'll get us ready for some pretty significant week next week. Okay, folks, take care, everyone. You're welcome, Nikita. Thank you very much, one and all, and look forward to being back here on Monday. Take care, folks, now. Goodbye.